Joining us now is Adil Taqi, DAMAC Group Chief Financial Officer. Adil, great to have you on the program.
Hello,
welcome to Bloomberg Markets Middle East. I mean, what a year this has been for you. I'd like to start off with just your sense in terms of the operating environment. This chart right here on the Bloomberg really tells the story in terms of high-end Dubai property. You can see this goes all the way back to 2009. You can see the downside pressure, right? This is the price per square foot. This is from Clutton's, both for high-end villas and high-end apartments. What's your take on the Dubai property story at the moment?
I think to understand where we are today, Yusuf, we need to take a step back and look at it from pre-crisis, going into the crisis and coming out of the crisis. In 2008, when Dubai, up until 2008, Dubai market had been growing. In 2008, not unlike the rest of the world, Dubai hit a tough financial crisis in which property prices and other asset prices crashed. Took Dubai around about 4 years to come back. If you compare that to some of the other areas, London, for example, in the early 90s, Asia in the 90s crisis, it took them about 9 years to recover, 9 to 10 years. It took Dubai 4 years to recover. And then Dubai had a great run in 12, 13, and 14, as your chart shows.
And so what happens after this line here? Are we going to see more downside pressure going forward?
I think our view is that it's going to be a sideway going for 2017, and I think it's healthy for market to do that. What gets a little worrying in real estate property when prices go up very, very strongly in a short period of time, especially when product are sold on an off-plan and credit basis.
We're seeing, of course, strength in the US dollar, one of the key themes across the shows for the last few weeks. How is that affecting your business? You're concentrated in Dubai, a lot of exposure in Dubai, and this is a place that, of course, gets easily affected by changes in the strength of the greenback.
I think strength of the dollar reflects the strength of the economy in the UAE, and it reflects Dubai and Dubai real estate as a safe haven for investment in many ways on a long-term basis. So what tends to happen, our core markets remain GCC, which are the currencies where the currencies are pegged, so that doesn't impact the strength or the weakness of the dollar. The Asian markets and some continental market, we've actually seen more demand from those markets when dollar strength, because fear is a great motivator and people think things will get worse before they get better. And people look for safety, for flight to safety, and Dubai tends to offer that for the region.
So how much cushion do you have against downswings in that Dubai market where you're highly concentrated? Are you planning to expand your assets from beyond the city more than you have already?
I think if you look at our history, we have been predominantly Dubai-focused. About 90% of our deliveries came from Dubai over the last 10 or so years since we've started delivering in 2006. Dubai will continue to be a core market. That needle will not shift because our land bank and our assets and our operating profits will continue to come from Dubai. I get asked this diversification all the time, but I think there's very, very difficult to find a market as attractive and as rewarding as Dubai on a risk-adjusted basis.
Now, some analysts have downgraded your stock on concerns that rising costs will eventually impact your profit margins. Will this be a problem?
Look, profit margin, this industry, in its very nature, the development business is cyclical. What you cannot do is wish cyclicality away, but what you can do is prepare and run with cyclicality. And I think you can actually acquire assets at very, very interesting prices when markets are down and deliver and position your products in a way that would allow you to achieve your financial results. Now, the margin in themselves, yeah, obviously when you're in the down cycle, that will come under some pressure, but it's also a function of how you've bought your land, how you've actually positioned your land and developing your land. And I think the way to look at business is on a long-term basis, as opposed to short-term cycles that the business goes in and out. The key thing is to manage your liquidity to be able to weather any cycle.
And that's key, because I'm looking here at the key insights on the Bloomberg, and you've got a cash balance of, what, 8.5 billion dirhams? So what do you plan to do with that kind of money? I mean, maybe some exotic adventures could be on the agenda.
I think we're very conservative. We stick to our knittings. We've been good and bad markets. We've had cash balances higher than that, and we've still stuck to our guns and done what we've always done. That cash balance split into what's restricted for projects as per the regulations of the land, where money comes into the project that can only spend on that particular project. We've got obviously very healthy cash balances outside the escrow balance, but all in all we've got near enough $2.3 billion in cash.
Adil, I've put up the EQRV function here just to again give our viewers a little bit of an overview of where you stand in terms of your peers, right? So this is a blended forward earnings, right? PE ratio right here. Your orange line, this is where your peers stand in terms of the average, and you can see you're trading there at an average of 4.9. Is the market mispricing or misunderstanding what DAMAC is about?
I think the market will do what it's best wants to do, and I think it's not for me to comment whether the market understands or does not understand the stock. But I think time and again, for our investors, we have been a fantastic investment. Take, for example, people who came in, and recently we had an investor summit day where we met some of our key shareholders, especially shareholders who come in at an IPO 3 years ago. They're more than doubled their fortune since. So I think it's been a pretty good investment, and going forward, we feel strongly about the returns we can generate for our shareholders.
The majority of your clients are Gulf buyers who have been susceptible to the swing in oil prices. What are they telling you now?
I think if you look at our investors continue to like our stock. They continue to like our story. And you only got to look back in as recent as last November, where I think the stock price was just a little over 2 dirhams, and now it's just under 3 dirhams. So I think and those who'd come in the long term had always also made substantial returns on their investment. So I think our shareholders continue to be happy. Our focus is to deliver the results that will allow the shareholders to see their fortunes enhanced.
Now, DAMAC follows a very strict pre-sale payment plan policy, little to no exception there. This has helped you keep your cash flow, your balance sheet in check. Tell us about this difference with other developers who are more troubled because they don't have such a thing as strict pre-sale payment plan policies.
I think we have always, and through the crisis we've learned this more than ever before, is that this business is about cash flow. If you look at real estate projects on paper always make money. But we see many developers, many parts of the world, do not see themselves through tough cycles. And that difficulty centers around their ability and how they manage liquidity. It's very, very easy to get excited when markets are good. Credit is easy to access to. Selling prices happen at a price level that encourages reinvestment. But you've got to remember, all of that sale is on credit, and you've got to collect. And therefore, we've been very, very strict on that. Having the cash and sufficient cash balances allows you a lot of flexibility in good and bad markets.
And some analysts are speculating that your stock could become of interest for the MSCI Emerging Market Index. Any plans to perhaps increase your free float to make that work?
Look, free float is an interesting topic. We get asked that question all the time. MSCI index is one very important dimension to look at. But I think if you look at strategically, the founding shareholder still owns 72% of the stock. It is possible, and it's not inconceivable for him to consider a further sell down, and that in turn will help the float anyway.
What about again, in terms of expansion, you said that you were open to new opportunities. Just give us a sense of where you would be putting money to work for new projects, new countries, new markets.
Okay. We remain and will continue to remain predominantly Middle Eastern developer. If you look at the Middle East at the moment, it's not having its best spell over the last 100 years or so. And from a property development point of view, we will be focused on Dubai. We like Qatar. Qatar is an interesting market. We like Saudi. Saudi is an interesting market. We may toy with Oman a little bit. But I think those are the markets that we want to remain in. Having said that, if you look at our pipeline, if you look at our land banks, that will continue to be Dubai for the foreseeable future.
All right, we'll leave it there. Adil Hassan Taqi, DAMAC Group Chief Financial Officer, thank you very much for joining us. Of course, one new feature we'd like to bring your attention to is one of my favorite functions, the interactive TV function. You can find it at TV Go. I've pulled it here up on the Bloomberg. The great thing is you'll be able to watch us live, but you'll also be able to see previous interviews and dive into any of the functions. Take a look at that, the key price checks over there. Also, if you scroll a bit lower, you will be able to see some of the great charts that we've prepped for you, including the EQRV function for DAMAC Properties, and also, of course, how Dubai real estate has fared.